Hello everyone, welcome back to the channel. Guys, in this video I'm going to explain to all of you what I do in terms of checking if the cash secure put option worthwhile to place the trigger or to place the trade. Okay, so this is just a simple trading journey that I have here, and I want to show you guys the entry first. Okay, so as you guys can see, very simple. We got trade, we got sectors, DTE. So basically, how many days the trade we have, which is basically an expiration date minus open date at that time, and days in the trade. Of course, this is black because the trade has already finished. This is open because I've been in the trade for 4 days. Okay, so don't worry about this for now because this is what I use after. See, we have the ticker symbol, the broker that I use, in this case is TastyWorks, open, close, stock price, strike price, premium, number of contracts, the delta, the implied volatility rank, and the percentile. This is the buying power that the broker requires to open the trade, the fees, and this is the cash required to buy those shares, okay? Because remember, we are selling one contract, we have to buy 100 shares for whatever price might be here, minus the premium that we are getting here for selling this option, okay? And this is being filled. The net premium here, that's how much you're gonna get in total, which is pretty much this thing here multiplied by 100, okay, times the number of contracts. And here it is. Let me see if I can go so you guys can see. Right, and here, let me delete here, and here we have here our entry criteria. Okay, so basically I need to get at least 20% annualized. If I don't get 20% annualized, I don't even open the trade, because that's my minimum, guys. Okay, I want my trades to be at least 20% annualized. You can have your targets of 30, 15, is up to you. My one, it is 20, because I think if you make 20% per year, it's an amazing return, okay? Amazing. But what happened is, as you guys can see here, I have this trade here, which is ticker symbol F, of course, Ford. I opened the trade for 35 cents, which it is here on our spreadsheet cell. We have one contract that we sold here, which it is here. We have this time that we sold was 38 days. And of course, it's been passed already 4, in this case 5, because I'm 1 day behind. I'm based in Australia, so that's why the 43. The strike price, it is 10, which is here. And of course, sell to open, okay? Very simple. So this is come from TastyWorks. So when I open the trade, as you guys can see here, we calculate that we are going to get 29.7 annualized. Remember, this is taking consideration this 43 DT, okay? By now, 4 days in the trade. That's what this means, okay? Days in the trade. So what if I want to close the trade now? Because right now, I can buy this option back for 0.07. Because Ford went up for the past, like what? Pretty much, this is going to be the second week that Ford is up. So far, no, actually, let me double check here. Okay, let me open another thing here. 1, 2, 3, 4, 5, 6. So basically, Ford is up 4 days out of 6. So I can get roughly 0.07 to close this trade. If I do close for this price here, okay, if I buy to close BTC order, I'm gonna get 80% of the 37 cents that we collect at the beginning. That's where these numbers come from, okay? If I close for 0.07, I'm gonna get 80% of this amount here, which is our premium collect. But how much it is going to be annualized? It's going to be, guys, 170%. Why? Because now the denominator here below the 365, okay, it is only 4. Remember, this is multiplied by rate of return, Okay, then we annualize them, multiplying by the number of days in the year, divide by our DIT, which is days in the trade. It gets me 170. That's how amazing it is. Can I close? Yes, I can. That's why it's green. Because if I get here, let's say, if I close this trade for 0.25 cents, it's still a lot because it's only 4 days anyway. 0.32. That doesn't allow me to close the trade. Why? Because I'm getting only 18. You guys get the point, okay? But if I close now, even for 10 cents, I'm gonna collect here 71% of the 35 cents, and annualize is gonna be 152%. This is the kind of thing that you must have, okay? Because you need to kind of quantify, okay? Especially here at the beginning. Because if you place trades all over the place, especially cash secure puts, because we want the cash secure puts to be transferred and transformed and converted, whatever word you might use, into the bill strategy or maybe into long-term investing if the stock drops a lot and you start to do our DCAs. But we must know roughly how much we're getting at the beginning. And once the trade goes in our favor, we also need to know what we are getting to close that trade right now. The reason this number is so high is because we only in the trade for 4 days and the option has decayed quite a lot because Ford went up for the past 6-7 days. Okay, you need to quantify, guys. Quantify. This is a very simple trading journal. Okay, this is not for sale, by the way. I'm not here to sell you guys trading journal. I'm just showing to you that you need to quantify. This is a very simple one that I have. My one is way bigger than this. Okay, here got some stats. I put the start here, today, of course, the date, and average daily, blah, blah, trading fees, all the little things, bits and bobs you guys can see. But my trading journey is way, way better than this. This is just so you guys can have an idea, okay? We closed 2 trades here so far, and that's the PNL so far, okay? But we need to quantify, guys, to qualify if it is a good trade or not. And something like this, okay, before you press the trigger and to open, and before you press the trigger to close, it can come in hand very well, okay? So use something, doesn't matter what it is, whatever you might have, okay? And then you can have an idea what you get into. Because the thing is, the saying is very true. If you start to collect pennies, okay, in front of a steamroller, trading cash secure puts or even a put option, even if you want to convert that into a long-term investing doing DCAs, still at the very beginning we want to get paid a decent amount of premium to open the trade, otherwise just not worth. Okay, guys, this is it. For those of you that have asked me what do I do for close the trade, this is one of them. Okay, and of course from here you can establish your 70%, 80%, and so on. I can go even more high than 80%. Why, you ask me? Because I want to hold the stocks. Okay, if I trade an ETF and ETF is 30% down, I'm going to close that only at the expiration date. I don't care less about 21 days, 30 days, because if I get assigned, thank you very much, I want to buy something at 30% discount. If the market is trading at the all-time high, I might do 70, I might do 6%. By something drop 30, 20%, 40%, I'm going to take to expiration, because if I get assigned, it's a win-win situation. If I get assigned, I get 30% discount. If I don't, I just reestablish the position again. Very, very simple, guys. I mean, we only lose money on things that we don't know. Educate yourself, because that's the best investment you can ever do when it comes to trade options. All the best, stay safe, and happy investing.